video on how to trade. This is an easy trading strategy that I use. It doesn't matter if you guys trade Forex, futures, whatever it is you guys trade, I'm here to help. And I wanted to just simplify this to you because not a lot of traders are showing you this certain perspective, and I think this will actually help. So the first thing I'm gonna do is I'm gonna go on here, obviously, and I want to show you guys the charts. I had to literally look this up and how to record this because I forgot because it's been so long. All right, so the first thing I'm always doing when I'm trading, guys, is I go on the charts and I choose 3 different assets to look at. I don't choose more than that, or else you're gonna get analysis paralysis. And if you're a Forex trader, go on forexfactory.com and look up the news. Red and orange news stands for the amount of impact the news is gonna have on the market. So when I'm looking for actual trade setups, I'm looking for a hot market or a warm market. So a warm market is when the economic data is like orange or medium news, and then a hot market is when the market is red, or sorry, the data on the news site is red. And so these are all events. So each one of these events affect the market. So if you're a futures trader, it may be a little bit different for you because you may trade something that the news won't really affect, or it will just be a different outcome for you because there's not really a site that just, I mean, there might be a site for just futures traders to look at in terms of economic data, but I mainly trade Forex and I trade Bitcoin and gold on the side. So all I do is anything I trade based off of what the market is going to do based off the economic calendar. So right here, we have USD CAD, USD JPY, and Euro JPY, right? I chose those pairs because if you go on this website right now and you look at the economic calendar, Sunday, Monday, we have the USD moving and we have JPY moving and we have Euro moving. USD is the main pair that's going to be moving at 10:30, and so your options are to trade before or after the news. I usually like to trade before or after. I never trade during the news because usually you get stopped out. So I trade smart money concept if you haven't heard of that. So smart money is a nickname for the large whales in the market that control the market via capital. So if a person has a lot of capital in any market, they're the ones that ultimately control the market because they have obviously money. And then when they put orders in the market, because of the fact they have so much money, it actually moves the market. So if I was Elon Musk, right, and I had like $10 billion and I wanted to buy like Bitcoin, everyone in the world is going to see that because $10 billion in Bitcoin, it's going to force it to go up because you have so much capital creating that price movement because of your order, because your buy orders. And then so what happens is I prioritize the red news and the orange news, but mainly look at red first. So we're looking at USD CAD, which is going to happen tomorrow. So we were in a downtrend on USD CAD, as you can see on the screen, right? Those blue circles you're looking at represent the highest highs and the highest lows that are on the screen. So I have these marked here to tell me market structure. So 4-hour chart is what I use for my long-term structure. The 1-hour chart is what I do for my short-term structure. And since there's news tomorrow, high impact news, we're most likely going to see price come and we're going to see price go and break like that. And sorry about the lag, guys. I don't know why it's doing that. So, but just pay attention to the screen. So we're most likely going to see price break this previous high and then come back down before we go in. A lot of traders will tell you guys this. So if you're a new trader and you're trying to understand market structure, yeah, we're going down right now, but people will think just because price goes like that, you see what I'm doing with the blue highlighter? Just because price goes like that doesn't mean we're in a new trend. Price has to come back down and retrace itself and correct itself before continuing to go up. And then we have a bullish trend. And that's not really what a lot of traders are talking about. So I wanted to make that clear. In order to get a new trend, you need a break of structure, but not only just a break of structure. You need a break of structure, which we have here. When break of structure is when price changes the trend. It breaks the structure. And a continuation of structure, COS, stands for price continuing the structure. So structure breaks in price all the time. So if you're in a bullish trend, right, and the market's going up, we have new highs being broken. But if that trend gets disrupted and it goes down, then we have a break of structure. So what we're going to do is we're going to wait for a break of structure, and then we're not going to trade. We're going to say, okay, we have some demand, price broke structure, but let's wait for a correction and price to continue. And when it continues, we have a new high made, we have a low made, and we have a previous high made, and we have a previous low made, giving us 4 pieces of market structure. And where are we gonna trade? we're going to look to trade in our range. So your current trading range is the range you are looking for actual setups, to be specific. So I trade order blocks and I trade fair value gaps. Those are the only two types of setups that I trade when I'm trading Forex, even futures sometimes, but I don't really trade futures. I trade Forex and gold and silver and Bitcoin. And so I usually like to look for that as my confirmation. And so the two ranges I'm going to be trading are here. I'm going to actually circle them right now. So look at the chart. Look at where I'm circling. You see this? That's the low. That's the high, right? And so we are going to be looking, if I'm buying, I obviously want to buy the dip, right? So I don't want to wait and buy price when it's all the way up there. I want to wait for the market to come back down a little bit at least. And when it's going down, the price is getting cheaper. So they call this discount price and premium price. So discount price is when prices are cheap, and premium price is when prices are expensive. So if you're buying, you should always be buying at discount prices within your price range. So you determine your price range by understanding market structure. Market structure is supposed to tell you where to buy and where to sell. And so that's how market structure works, and also the trend, of course. But if you're a day trader and we're doing technical analysis, we need the market to show us these ranges, so you know where to trade, because you're just looking at the screen. You're like, okay, so how am I going to make money? How am I going to trade? First, learn market structure, and then learn about breaker structure, because breaker structure is a direct translation of new demand coming into the market. So when there's new demand that comes from news, you get I'm sorry guys, when there's new demand that comes from news, you get a new range. And that's the range we trade as a smart money trader, because we're following, the whole point of smart money trading is to follow the banks and institutions. So the banks and institutions are the one that control the markets most of the time, in the Forex market, even in the futures market sometimes. In crypto market, it's more about a sole person and an individual entity or an organization that usually controls Bitcoin, because a lot of people, there's individual people that own a lot of Bitcoin, and one person that's really rich can literally make Bitcoin go up or down. And so it's really, this is what trading is about. It's about buying low and selling high, and buying at discount prices and premium prices. So you can write that down. Discount price means low price, cheap price. Premium price means expensive price, high price. And so you guys can utilize this knowledge when you're approaching the market, because it helps you become a better trader, and it teaches you, it just makes everything so much simple, right? So right now on USD CAD, I'm expecting the US dollar to move tomorrow, so I'm going to wait until the market goes up like that and does what I said earlier, and then we're going to look for a trade tomorrow together in those two ranges when you watch my next video. And so that's already a setup I have. I mean, it's not an actual setup because I don't have an actual entry price. Sorry, I don't have an actual entry zone or anything like that. But this to me is a setup. I am waiting for something to happen, and so once that happens, I'm going to be able to enter my trade. And so I'm not predicting this and saying it's going to happen, because I don't trade unless I see what I want to see. So the market can actually go reverse and go back down, and then when it goes back down, I can actually just continue selling. So the market may not go up, and it may just go down instead. And so this is why market structure is important. So if you guys are confused by this, don't do anything and don't listen to me besides the market structure. Learn market structure, and the way you learn market structure properly is by zooming out. So the 4 hours is what I use for my long term, the 1 hour is what I use for my short term. I zoom all the way out, and then when I zoom all the way out, I mark my highs, my highest highs and highest lows. And so what I do is, like I had those blue circles, those are that's my long term. Sorry guys, hold on. That's my long, I thought I heard something outside. That's my long term trend, right? So the key to market structure is to zoom all the way out. So we're gonna go on the 4 hour. So I'm gonna show you. I want you guys to see how I found those blue circles. Zoom all the way out, right? And a lot of traders tell you, okay, so market structure is always, it looks bearish. Okay, well you're gonna want to drag your price action all the way to the left side of the screen. You see how much easier it is to analyze this market? When you have price action to the center of the screen, look at all that price action that we have behind in the past. We're looking at all these highs and lows, and we can mark up any of these. But the whole purpose of moving the screen, moving price action to the left, is so you can see the current trend clearly, so you're able to actually trade and make money. So this is all you need to do, guys. This is literally all you need to do. First, get good at market structure, and then when you get good at market structure, you learn break-a structure and continuation of structure. Like I said before, continuation of structure is when a trend is continuing. A break-a structure is when a trend is disrupting. And so, like I said, all that stuff I said, we're going to go to UJ now. And also, by the way, make sure you guys are taking notes, because sometimes when you don't take notes, it makes it really hard to understand this stuff. I don't make super long videos because I don't want you guys to just digest all this information and be like, I don't know what to do and blah, blah. Like, I want you to be able to, like, I mean, not digest. I don't want you to be able to, like, just skim through information and not understand. I want you guys to understand. And so I make the videos shorter, like 10 to 20 minutes, sometimes 20 minutes, but I make them usually 10 to 15 minutes because I want it to be really short and I want it to be simple. Simple is what I like. We only like simple here. So UJ, we're on UJ right now. And so in the 4 hour, we have a kind of wonky looking structure, right? We have a wonky looking structure. So when it looks all wonky and shit like this, I'll go to the 1 hour. Bam. Look what I see. Highest. Okay, so we have a bunch of highs and lows to mark up. First step, zoom all the way out. We did that. Go to the left. We did that. And now we're going to mark up our low. Sorry about this lag, by the way. I know it's doing this weird shit. So start from your lowest low. Start from your highest high. Lowest low. You see what I'm marking? Lowest low and the highest highs. I marked the lowest lows and the highest highs of market structure. That's the whole point. Market structure. The structure that contains the trend is the lowest low and the highest high. And so now that I have those marked up, then you can go to the 5 minute, the 15 minute, and you can do the same. And then you can look for your range and enter your trade setups. And so this is pretty much all I'm sharing with you guys today. I want you to take everything I said and write it down. And I want you to leave in the comments if this was helpful. And I'm going to go more in depth tomorrow. I'm not just going to leave you guys here and make this all like, oh, well, that's it. Oh. But this is literally going to be very, very simple. Okay. So come back tomorrow and let me know what you guys think. And I genuinely hope this helped you all. Peace.